When most people think about buying a home, they usually only think about the down payment, but don't realize that there are a few additional costs that you'll need to factor in and can cost you quite a bit of money that you might not have been prepared for. They are earnest money, inspection, appraisal, down payment, and closing costs. But make sure to stay till the end of the video because I'm actually going to tell you guys a few different ways that you can keep thousands of dollars in your pocket. Stay tuned. Welcome to Moving to Minnesota, the channel that's dedicated to teaching you everything you need to know about moving and living here. So today we're going to cover how much it actually costs to buy a home, and that's cash out of pocket. And spoiler alert, you don't need a 20% down payment. That's a myth. So since we're already on the topic, let's start with down payment. Now, this is clearly the biggest out-of-pocket cost of buying a home, but again, stay till the end of the video because I'm going to give you guys a couple ways to even get around the down payment. But the common misconception that a lot of people have is that you need to save 20% to buy a home, which is completely false. The truth of the matter is that your down payment will typically be anywhere from 3 to 5%, and that's depending on your credit score and what kind of loan you have. But there are two special kinds of loans which actually require a 0% down payment, and those are your VA loan, which can only be used if you're a veteran or a current active duty, or a USDA loan, which is a loan that allows you to buy a home in what's considered rural city. There we go. But for now, we'll stick to the two main kinds of loans that most people will be using, and those are the FHA loan and the conventional loan. So for those of you using an FHA loan, that'll be a 3.5% of the purchase price for the down payment. And then for people that are using conventional loans, you can expect to pay around 3%. So as a quick example, let's say you're buying a house for $300,000. With a conventional loan at 3%, your down payment would be $9,000. Now, also keep in mind that your down payment isn't paid until the day of closing, but there are a few other costs that will come before that, which we'll talk about now. Now, the first cost is what's called earnest money, and this is paid as soon as you get an accepted offer on a home and the purchase agreement is signed by both the seller and the buyer. Now, the amount of the earnest money varies, but it'll typically be around 1% of the purchase price. So going back to that $300,000 house example, the earnest money for that would be $3,000. Now, you're probably thinking right now, what the hell is earnest money and why is it so much? Well, earnest money is kind of like a good faith payment that you put down to show the seller that you're serious about the deal, and it gives you some skin in the game. Now, earnest money actually gets credited towards your down payment at closing, so realistically, just think of it as giving part of your down payment now and giving the other part at closing. Now, depending on the contract or how the contract is written, you can get your earnest money back if something happens and you don't end up buying the home. Like for instance, let's say you lose your job or a big storm comes through and damages the house, or you no longer qualify for the loan. Now, the second cost with buying a home is the home inspection. Now, the home inspection is actually optional and you're not required to do a home inspection, but there's no way that I would ever suggest a client skip this. The home inspection price will vary based on the square footage of the house and the age of the home, but will typically range anywhere from $400 to $500. Depending how thorough you want to be, the inspection can actually cost more than that if you add additional services like mold tests, radon tests, or sewer scopes, which I typically recommend on all older homes, especially the ones like here in Minneapolis and St. Paul. Now, you'll usually schedule the home inspection at least a few days after you get your accepted offer, and in most cases you need to pay it before you'll be allowed to view that inspection report. Hey, real quick, I'm hoping you guys are finding a lot of value out of this video, and if so, make sure to hit that like button for me so that I know that I'm making content you guys want to see. Now, I know right about now you're probably adding up all these costs thinking to yourself, how in the world am I going to afford all this? But make sure to stay till the end of the video because I'm going to be giving you guys some tips on how to get past all of these costs and keep some money in your pocket. Now, back to the video. Now, next up is the appraisal, which lenders will require you to do prior to giving you the loan, where the appraiser comes out, compares the home to similar homes in the area that have recently sold, and just makes sure is basically that it's worth as much as you're actually paying for it. Now, this ensures that you're not overpaying for the home, and it also ensures that the bank is not lending you more than what the home is worth. Now, the appraisal will typically cost about $500, and the payment can be dependent on the lender that you use. Some lenders will have you pay it before they'll schedule it, and other lenders will charge it to you at closing. But either way, you'll want to make sure that you have at least $500 set aside for that. And the last cost associated with buying a home are the closing costs. Now, you guys probably won't like this one because aside from the down payment, this one can be big. So closing costs include a bunch of different fees that are all lumped up into one that must be paid the day of closing. And some of these fees include lender fees, title fees, property taxes, home insurance, prepaid interest, etc. Now, all of these closing costs together can quickly add up to be the same amount as your down payment, which can give most people quite the sticker shock. But because closing costs aren't as black and white as down payment because of the... Did I write? Now, closing costs aren't as black and white as the down payment is, so the amount that you're going to have to pay really depends on the companies that you use and the price of the home. A general rule of thumb is to save an extra 3% of the purchase price to account for those closing costs. So basically, using that $300,000 house as an example, closing costs, down payment, appraisal, earnest money, and home inspection, that can cost you about $20,000 out of pocket. But let's talk about the ways that you can cut that in half or even turn that into zero. Now for the good part. Let's start off by talking about a couple of the simplest ways to get out of having to cough up another 3% out of pocket for closing costs. The first method is actually ask the seller to pay for them for you. Now, your first reaction is probably, why the hell would the seller pay my closing costs? Well, this is not always going to work, but it really depends on the specific situation. Asking the seller to pay for your closing costs will usually be determined by how long the house has been on the market, meaning the longer the home has been on, the more willing the seller may be to negotiate. So let's take that same $300,000 home as an example again. Now let's say that house has been on the market for 3 weeks and still hasn't sold. Well, at this point, the seller is either already moved into their new house and they're paying 2 mortgages until the old one sells, or they can't buy their new one until this one sells. In this instance, it's not uncommon for the seller to consider lower offers, but this is where buyers usually mess up in their negotiating because everyone's always trying to get a deal on the price of the house instead of trying to keep dollars in their pockets. Now let me explain. In most cases, a $5,000 decrease in the price of a home over the span of a 30-year mortgage is only about $20 a month on your monthly payment. But if you ask the seller to instead cover $5,000 of your closing cost, that's $5,000 that you didn't have to come up with today. Money that you could use on furniture, home improvements, a rainy day fund, etc. But from the seller's standpoint, either way they're gonna lose $5,000, whether you ask them to pay $5,000 of your closing cost or you offer them $295 instead of $300. Now, let me know in the comments which one sounds better to you. Saving $20 a month on your mortgage in a house that you're probably only gonna live in for less than 5 years, or not having to cough up $5,000 out of pocket today. Another similar method that can be used is, let's say the house hasn't been on the market very long and you want the seller to pay your closing costs but offering more for the home to cover the difference. So going back to that $300,000 example again, you ask the seller to cover $5,000 of your closing costs, but instead of offering $300,000, you offer $305,000. Now, in this method, the seller still ends up netting $300,000 even though they're paying your closing costs, but instead of you having to pay it for out of your own pocket, you actually get to instead roll it into your loan for that additional $20 a month on your mortgage. Now, the only potential downside to this method is that you want to make sure that the house is going to appraise for that extra amount, otherwise the lender won't let you do it. Now, let's talk about a way to get both the down payment and the closing costs paid for. The Minnesota Housing Down Payment Assistance Program. So there are 2 different kinds of programs out there that Minnesota Housing offers. One is the deferred payment loan and the other one is the monthly payment loan. I hope you guys heard me say the word loan. Now, these are not free money options, but I will be telling you guys about a free money option right after I get done explaining these 2, so make sure you stick around. Now, with the deferred payment loan, you can borrow up to $12,500 to help pay for down payment and closing costs. Now, this loan has no interest payments and you only need to pay it back once you sell the house or refinance. And the other one is the monthly payment loan, which allows you to borrow up to $17,000 to help pay for down payment and closing costs. And this one does need to be paid back on a monthly basis. So if you take out the whole $17,000, your monthly payment will be around $170 a month for the next 10 years. And just like the deferred payment loan one, you do have to pay this back if you decide to sell the house. Now, these two options are really great for people who can't come up with a large sum of money and gives you some options with buying a home without having to bring a lump sum of cash. Now, there are some credit score requirements and income limits for both of these programs, which I'll link in the description below. But if you do want to learn how to get started with either of these, reach out and I can help you with that. And lastly, this one's probably one of the best down payment assistance programs that I know of, and it's called the WISH program and is offered by a local lender here in Minnesota, which is called Refined Lending. My light just went out. Now, in order to fully maximize this program, you do have to have a little bit of money saved up, but you will benefit from getting an additional $22,000 that doesn't need to be paid back. Are you interested now? So the way that it works is that Refined Lending will match your down payment contribution at a ratio of 4-to-1, meaning that if you bring $1,000, they'll give you another $4,000 up to $22,000. So if you can bring at least $5,500 of your own money, Refined Lending will give you an additional $22,000 to help pay for your down payment and or closing costs. Now, the true benefit of this program is as long as you stay in the home for at least 5 years, you don't have to pay this money back at all. I know this may sound too good to be true, but I've actually helped a few clients utilize this program, and I can tell you firsthand that, this is indeed real. Each year, Refined Lending allocates a certain amount of funds towards this program, and once funds run out, they're done for the year. So if you're interested in learning more about this program, then leave a comment below and I can get the info that you need. And that is it for today's video. If you found this info useful, please make sure to hit that like button for me. Also, consider subscribing so that you don't miss any more content like this. As always, leave a comment below or reach out to me directly with any questions you may have, and I'll see you guys in the next video.